Thank you very much indeed, Karen. Yes, looking at financial markets in Europe, the trading day has just kicked off, and actually that situation with regards to Ukraine is very much weighing on the minds of investors and market traders as they react to all the news that has been coming out of Washington. So Karen there mentioning the fact that the US has announced that it is pausing military aid for Ukraine. Interestingly, during the last few days and weeks, we have seen defence stocks, for example, listed in Europe do extremely well off the back of that news. And we'll see reaction to what Ursula von der Leyen was just outlining there in Brussels as well. But if we just bring you the latest on tariffs, as you've been hearing, Donald Trump has doubled down on his threat of tariffs, saying that time ran out to reach a deal. So from 5 GMT this morning, the US imposed new charges on goods imported from Canada, Mexico and China. So in the case of Canada and Mexico, the tariff on all imported goods to the US is 25%. Officials from both countries have been in Washington in recent days, and they've been trying to broker a reprieve on this, but they were not successful. Canada has already said, therefore, it will impose retaliatory tariffs against US imports of $155 billion, with the first $30 billion starting today. And these will affect all sorts of goods, food, clothing and energy. Trump has also hit China with additional 10% tariffs today. This is on top of the 10% that was imposed on Chinese exports in February, meaning goods from the world's #2 economy will face a levy of at least 20% now. And Beijing responded by saying it's imposing its own additional tariffs of between 10 and 15% on some US products that will start on the 10th of March. And these products is a whole range as well, including food, vegetables, biotech instruments and all sorts, aviation. US stock markets, not surprisingly, off the back of the announcement from the White House that these tariffs would be going ahead, responded pretty badly. That was the close of trade on the Nasdaq on Wall Street. We also saw the Dow and the S&P lose quite a bit of ground. Let's have a listen in again to what President Trump had to say on this.
No room left for Mexico or for Canada. No, the tariffs, they're all set. They go into effect tomorrow.
Mr. President, just to follow up on my colleague's question.
And just so you understand, vast amounts of fentanyl have poured into our country from Mexico. And as you know, also from China, where it goes to Mexico and goes to Canada. And China also had an additional 10, so it's 10 plus 10. And it comes in from Canada and it comes in from Mexico. And that's a very important thing to say.
Let's be clear. If Trump is imposing tariffs, we're ready. We are ready with $155 billion worth of tariffs, and we're ready with the first tranche of tariffs, which is $30 billion, which is already known.
And we'll be getting more reaction from Canada in a moment. But first of all, let's focus on Mexico. So the Mexican currency, the peso, has fallen quite a bit, down around 1% since the new tariffs were confirmed. I spoke to Juan Carlos Baker. He is former Deputy Trade Minister of Mexico, and he gave me his thoughts on these latest developments from Mexico City.
I think that the plan, as you mentioned, has been touted for a while. President Sheinbaum has repeatedly stated that Mexico does have a plan, but the reality is that details of such plan have not been disclosed as of yet. My guess is that the president was waiting until the very last moment to see if the tariffs do come into effect, because in the past, President Trump at the very last minute withdrew his threat. It doesn't seem to be the case now. So we would be expecting the official Mexican reaction tomorrow morning once that the president delivers her daily press conference, and where details we expect will be laid out. However, speculation is that such plan B involves what the Mexican retaliation would be against U.S. goods exported to Mexico in a similar fashion to what Canada has already announced. But reality is that we do not know those details just yet.
Many American companies, big names in the car industry, for example, have got factories in Mexico, make their goods in Mexico, which are then brought in to America. Talk us through the impact this will have.
Well, there will be two types of impacts, Ali. The most immediate one would be, of course, the hit that the stock market, exchange rate, and other variables will take. That can be expected within the few hours once the tariffs have been confirmed. Now, in the longer term, and by longer, I mean maybe 1 month, maybe 2 months, this is just how fast things are moving right now. I would expect that some investments that are due or that are supposed to come to Mexico would be canceled. I would also be expecting that some of the companies that, as you say, have large operations in the country make some announcements on reconsidering whether some of that production can be shipped back to the United States in order to appease Donald Trump and by extension to avoid those tariffs. But the reality is that all those movements, whether major or not, are really not going to be sufficient to undo the deep integration that Mexico and the United States have and that has been constructed over the past 40 years. So my expectation would be that if Mexico retaliates with tariffs of its own, then after a few weeks, some serious efforts need to take place in order to remove those tariffs and try to reassume trade as normal as possible. But again, it all depends on how Mexico decides to respond.
So that's the reaction from Mexico. Let's get some thoughts from Canada. Moshe Alanda is Senior Lecturer of Economics at Concordia University in Montreal and explained he's not sure Canada's economy can avoid a recession with these new tariffs in place.
It's unfortunate. Everybody in Canada was hoping for the best, but preparing for the worst. I think you played a clip earlier of one of our ministers saying that we're ready. I'm not entirely sure that it's going to have the desired effect, but Canada's going to do what it can to show that it's going to stand up to Trump and the administration.
And just talk us through what that looks like in Canada, because of course we've got a government that's aware there's an election very, very soon. There could be a change of guard, and yet they're trying to deal with this current crisis, which is huge for the Canadian economy. Many are saying this could push Canada into recession.
It's very likely going to tip us into recession. And you're right, we're a little bit rudderless right now in terms of leadership. The governing party is about to appoint a new leader by the end of the month and probably call an election sometime in the summer, where we're expecting to see the Conservative Party take power for the first time in a decade. You would think that that party might be a little more aligned with the Republicans in the U.S., but in fact, it doesn't appear that there's any love for the conservative leader. And in fact, the Liberals are now pulling ahead in the polls for the first time in a long time. The Trump tariffs seem to unite Canada in a way that we haven't seen in a long time, including the separatist province of Quebec. So I think the Canadians are prepared that if there's any cost that we have to bear, we're prepared to bear those costs as a way to try and show that we're not inferior to our big brothers to the south.
What can Canada offer to President Trump to sort of try and remove these tariffs going forward? Because when he initially announced the 30-day reprieve, that was in response to Canada saying, listen, we're really increasing operations on the border to prevent movement there. We've got a czar monitoring the border. We're looking at the drugs crossing across and all that kind of thing. I mean, what more can Canada be doing, do you think?
Yeah, it's probably what's next on the bucket list for Trump. He's very upset with the dairy management and the agricultural restrictions that we put on the Americans to access our market. We're very restrictive about Americans and their banks operating here, their telecommunications companies. And the Americans have long criticized Canada for not spending 2% of GDP on defense and shirking our NATO duties. I have a feeling that even if we say that, look, fentanyl was never the issue to begin with, immigrants crossing from the north into the U.S. was never the issue to begin with, I have a feeling that he's going to say, yeah, you're probably right. You've done what you need to. Now here's the next things that I want to make the tariffs go away. And I have a feeling that even if we start to address those things, it's merely going to be a long list of grievances that he has.
Moshe Alanda there, an economics professor based in Montreal. Well, let's now focus on China. It has announced today its own retaliatory tariffs of between 10 and 15% against certain US goods. China has said it will fight to the bitter end if the US pushes on with a trade war. Chinese leaders are in Beijing today. They're at their annual meeting with economic growth high on the agenda, as Nick Marsh explains.
Pretty gloomy picture, as you'd expect. Those countermeasures that were promised by the Chinese Commerce Ministry were announced less than an hour after the US measures came in, a whole raft, mainly on American agricultural products, as you've outlined. They're expected to come into force on the 10th of March. Like you say, the foreign ministry in Beijing has just come out and said that it is prepared to fight to the bitter end if this new trade war escalates even further. But none of this really is good for China. Let's not forget that its economy is really in the doldrums. It's struggling with low growth, with weak demand. Households are feeling poorer because of this protracted property crisis. So plenty of domestic issues to have to deal with as well. As you quite rightly pointed out there, the top leadership is meeting in Beijing. It's going to set its annual growth target. We're expecting that to be around 5%. That's pretty ambitious considering the context of all of this. How are they going to be able to do that? Well, it's going to take quite a lot of government spending to stimulate that internal demand. Do local governments, does the central government have the money to do that? Maybe not. So China's looking to alternative investments in high-tech industries, things like artificial intelligence, green, renewable energies. The idea is that China will be able to grow through these industries of the future, and crucially, that they want to become world leaders in an area where they don't have to depend so much on the US and they won't be hurt so much by measures like we've seen today.
So that's Nick Marsh there, who's in our Asia Business Hub. So Asian markets closed lower on the day. Japan's main market, the Nikkei 225, down over 1% at the end of the trading session. And right now in Europe, we've had 45 minutes of trade in the key financial markets across Europe. London's down, the FTSE 100 is down by 0.6%. Germany and France are seeing stocks slide as well. In fact, right across Europe, stocks are sliding. But where the money is going? It's into safe havens such as sovereign debt. So people are moving their money, and it's not just about trade and tariffs and the concern that what impact that will have on the global economy. But for Europe, of course, it's also Ukraine and the latest developments as far as that is concerned. If we stay on the subject, some prominent economists are warning these new tariffs that we've been talking about will hurt the US economy, and manufacturers across America are getting ready for a hit. Our North America business correspondent Erin Delmore looked at how the $41 billion domestic toy market is reacting and found it isn't all fun and games.
Here at the North American International Toy Fair in New York City, I'm surrounded by things that delight. But manufacturers aren't feeling so joyful as they ready for new tariffs set to go into effect, including an additional tariff on imports from China. That's where around 80% of toys sold here in the U.S. are made.
We do know this, that tariffs will be inflationary for toys. Raising toy prices is bad for small businesses, it's bad for families that are budget conscious, and it potentially even swings the door open for knockoffs and counterfeit toys that might not go through all the testing, and that might be seen like a cheap alternative to parents out there.
And when we talk about tariffs doubling from 10% to 20% on imports from China, who pays the price?
We all believe now it's going to be the U.S. consumer. Again, at a 20% or 25% rate on a tariff, it really is impossible for that not to be passed on in some way to the U.S. consumer.
Jay Foreman, founder and CEO of Basic Fun, says that consumers could end up paying $1 more for a $5 toy, maybe $5 more for a $20 toy.
For an individual item, that doesn't sound like a lot, but when a parent is gathering a basket together of Christmas presents to put under the tree, it might cost them an extra $50, $100, $200 to buy those gifts for their children. And of course, I hope the administration would not want to be the Grinch who stole Christmas and raise prices on toys.
Erin Delmore, BBC News, New York.
And of course, there are other business stories out there this hour. I can't cover them all. We haven't got the time in this programme, but do look at our website and the BBC News app. Corinne, back to you.